Hey guys, hope you had a great weekend. I'm going to get started off this week with Biogen. So Biogen has a very important event tomorrow. Their FDA decision for their Alzheimer's drug. They're predicted to move about $75 this week in either direction based on the decision. And currently it looks like a split based on betting patterns in the option market. So it seems like everyone's betting either up or down by that amount. So hard to really ascertain what's going to happen. But if you look at the 1-year chart, you can see that we've had these binary events before. And what happened last time was it shot up about $100 and change from closing price of 247 the day prior on November 3rd. Following day, it hit a high of 363. So that happened last time. There was bullish movement into close on Friday as well. You can see that this candle, we had a nice push up from 270 area up to 291. If it is approved, expect it to go to around, I'd say 400 perhaps, pretty fast. Here's the longer term chart on Biogen as well. If you pull up the 5-year chart, you can see. So we've hit as high as around $388. This is a massive drug. If it's approved, that will be a large revenue stream for them going forward. So expect a massive spike up to around $350, $400 from the current price. Looking at the option chain though, we can see that the liquidity isn't that great overall, and betting directionally is going to be expensive. So if you do want to bet on a move in it, you have to look at using spreads. This is actually AMC, but here's Biogen right here. So notice that the historical volatility is 27%. The implied volatility right now is 118%. This means that options are very, very expensive, right? So you can see it for the 1-week move right now. The 1-week straddle price is about $74 overall. It's actually skewing to the downside right now on the puts. Puts are a bit more expensive than the calls, but either way, not a lot of liquidity. Spreads are fairly wide, I guess, in the odd number strikes. Like over here, you can see, for example, 5 wide spreads. I would probably wait for the event to occur and then play it afterward, right? You might play continuation to the upside or scalp it to the downside, depending on what happens, right? But a better way to play it may be to look at LLY instead, right? So LLY is a competitor to Biogen, and they will be affected negatively if the drug is approved because they're currently in the same market, right? So looking at LLY for the week ahead, IV is still pretty high, 25.9%, historically 20%. This week, expected move is about, well, spreads are very, very wide, but right now, looking like about $10 in one direction from the current price. So upside 210, downside 190 or so. And if you pull up the chart here, we can see how it's been performing the last 5 years. And here's the 1-year chart, right? So been in a nice uptrend of late. If that is approved for Biogen, expect a pullback on LLY, right? I'd imagine a pullback down to around 180 would be in order, kind of like the drop we saw over here from March 12th, 208 or so, down to 190 on March the 15th. And yeah, it might be a better way to play it, this event. If you are playing it, keep in mind this happens tomorrow. So FDA decision should be out tomorrow on Biogen's Alzheimer's drug.
Nick, are you muted by any chance?
Oh yeah, sorry about that. There we go. I was talking the whole time right there. Thanks for reminding me, Sam. Appreciate that. I guess I hit the wrong button. Yeah, I was just saying that Nvda has had a massive run the last few months, and over the last couple of weeks, it's up about 30%, as you can see over here. There are some gaps to fill on the chart, and it probably is very overextended, which means that a pullback down to around 650 is, I would say, a pretty high probability event. The deviation in valuation between AMD and Nvidia is now very, very wide, wherein Nvidia is worth more than 4 times that of AMD. So looking at AMD, here's AMD's chart. We can see that over the last roughly 10 months from last July or so, it's traded in a range of 72.50 or so, downside, upside of 97.50. And right now we're seeing an SL consolidation pattern in the 80 area, which likely bodes for a push up to 85. That's an area where you might see some resistance, possibly as high as 87. Again, the high prior to earnings was 89, right after earnings was 89.20. So expect a push up on AMD here, and the IV is low on AMD as well, whereas the IV is higher on Nvidia. So if you want to play that market, semiconductors, look at AMD. I know I mention every week. The reason why is because I'm always trading it, so I know it pretty well. I do expect it to hit 85 at some point in the next couple of weeks, possibly as high as 87 or so. And if it gets anywhere near 90 or so, that would be heavy resistance. But again, if it breaks through that, we may push toward 100 and then break above that and create a new range, right? This consolidation over the past 10 months has been very, very nice. And it bodes well for a nice push up toward 100 and then creating a new range around between 100 and 120 or so. So keep an eye on that. Next up, moving on to the meme names that were running last week. So we saw some of these ridiculous names like AMC just take off, right? AMC in the last couple of weeks has gone from $12 on May 24th to as high as $72 and change. It's now at 43 and change. It's very risky trading these names, like AMC, BlackBerry, GameStop, Virgin Galactic, for example, right? Because they're heavily shorted, but they're also very volatile as well, right? So if you're buying these names way up here, just understand that it's very, very easy for it to fall all the way back down to this area right here, right? So 20 or below. At the end of the day, it's a movie theater company. They're not doing anything revolutionary at all, and the business is still pretty precarious, obviously. Kudos to management for recognizing the overvaluation in stock price and issuing new shares. That is a very smart move financially from them. But again, as a shareholder, you don't want to be holding these shares at $40 plus and being beg holding it for months or years, perhaps, if it pulls back down to $20, right? So looking at the option chain on AMC, we can see that for the coming week, the IV is extremely high, 360%. The HV is 248%. So for the week ahead, the expected move right now is approximately $20 in one direction. Notice that the skew is favoring calls instead of puts as well, right? So the at-the-money calls are far more expensive than the puts right now, right? And you might see it hit as high as 65 or $70 again this week, but at the same time, the downside is roughly $20, right? So keep that in mind when you're trading these names. BlackBerry had a pop on Thursday to $20, and it finished below 14 on Friday, right? So anyone that bought options when it was popping or bought shares, when it was much higher, they might be bag holding it for a long time, right? Recognize when you're paying high premiums in a high IV environment, and choose to take more appropriate risks when it makes sense to do so, right? You're going to make more money by buying options when they're cheap, and obviously selling them when options are more expensive. If you're buying when options are expensive, your risk is much higher. Probability of profit is much lower, right? So looking at BlackBerry as well, you can see over here that BlackBerry, let me pull the chart up again so you can see it as well. Here's BlackBerry's chart. They had a massive pop-up back in January as well. They went from 740 up to a high of 28.77, and then they pulled back down again. And recently they went from a price of around 850 up to a high of 20 on Thursday before pulling back on Friday. So looking at BlackBerry right now, again, the options chain tells us that the expected move for the week ahead is roughly $4 in one direction. So it could pull back down to like around $10, or it could pop up to about $18, right? But again, the IV is still very high, so buying options now makes no sense. Just as an example, right? If you had bought the call options for next Friday. It's coming Friday. Last week, I'll pull up the chart so you guys can see how fast the decay occurs, right? So here's the 2-week chart on the 20 strike call options on BlackBerry, right? So last week on Tuesday, they're trading at 28 cents, right? On Thursday morning, they hit a high of almost $6, and now they're at $1. So if you bought anywhere above this area right here, pretty much, you're probably screwed. So again, buy options when they're cheap. Don't chase options when they're expensive. It's very important to analyze the implied volatility each time you make a decision with regard to purchasing or selling an option, right? If you don't do that, you're incurring a lot more risk than you should be incurring, and your probability of profit diminishes greatly, right? If you're buying cheap options, that's fine. The maximum loss is like 25, 30 cents. It's not a big loss, assuming you're not taking a massive position, right? If you're buying when it's $6, that's $600 for one contract. Keep in mind, whoever bought this contract, when it hit $20 on Thursday, they needed the stock price to hit $26 by next Friday just to break even, right? That's a rise of 30% just to break even on the trade, right? Terrible decision making, right? And there was a fair bit of volume there as well. A lot of selling volume, actually. So people took advantage of that, probably selling options out of the money. Aside from that, looking at Alibaba. So Baba has been consolidating for a few weeks now. Had a nice pop on Monday. If you saw that pop, good job on the news that China is going to changing their policy to 3 kids from 1. So that was a big policy change that caused Asian stocks to pop on Tuesday after the holiday, but obviously it sold back off. Looking at the longer term time horizon on the chart, we can see that it's forming the same formation that usually forms once it hits a bottom, where it consolidates in a range for a few weeks before popping back up. And the catalyst here is probably going to be earnings, which should occur, I believe, in late July. That should cause a pop up to around 230, 240 per share, possibly even higher. I like the stock over here. The valuation is very, very fair. Obviously, the risk is political overall. The CCP controlling the company somewhat, and also it being an Asian stock that is subject to scrutiny with regard to accounting practices, right? So that's an issue as well. I do like it though, however, because the IV is low on Baba. So I'll pull up the option chain here. You guys can see what I'm talking about. So this is what I meant, right? But buy options when IV is low, not when it's high. So right now for Alibaba, the implied volatility is 26.8%. Historical is 28.3%. So right now options are cheap, right? This is when you want to be buying options because they are cheap. So it doesn't guarantee you're going to win, but your probability of profit is much higher than if you're buying when options are expensive, right? And just for reference on how cheap the IV is, I can show you on a graph. Let me just pull it up. Whoops, that's not it. 1 second, bear with me here. So here is the implied volatility chart. You can see over the last 2 months, IV is the lowest it's been across different time horizons. The only one being the July OPEX, which is a bit more expensive than it was back in late May, right? But for the June OPEX, which is coming up in 2 weeks, IV is super low. And for the August OPEX, it's also very low as well, right? And this factors in an earning report. So you will have that one binary event in between now and expiration, right? If you pull up the chart to go out a year, you can see how much implied volatility has dropped. So if you notice here, if you buy options at the bottoms of these trend lines in the IV charts, typically you see a spike followed by following a huge dip. So right now we've seen a massive dip. In all probability, in the next, I would say 1 month, let's call it, you're going to see a spike back up in IV. That should be followed by or in concert with a spike in the price. I would imagine that the 200 area is going to hold for support, and you're going to see a test up of around 230, 240 per share, possibly 250 or so in the next couple months, right? So keep that in mind as an idea for trading on. Also this week, let me change screens here 1 sec. So 1 second, let me just get rid of these screens here. Got too many up. So also this week, there was news that over the weekend that the G7 nations came to a tax agreement that may affect the mega cap stocks like Amazon, Apple, Google, Facebook, Microsoft. So this may have an adverse reaction to these names over the coming weeks right now. So Amazon trading near a little bit of support, I guess, right over around 3130 area. And if this pulls it back down toward there, you might see it drop down to as low as $2,900 per share, which it hit back on March the 5th. If that happens, probably a pretty good buying opportunity, but I think you're going to see these shares under pressure for the next few weeks, perhaps due to this this news. There's also Facebook I mentioned, right? Facebook is at a high right now. Might not be a bad idea for some put spreads if IV is high, or some bear call spreads, or if you are already in it, might want to sell some calls against your position, perhaps. Apple hasn't really ran too much, so but again, their support is around the 120 area, so $6 off the current price. And then there's also Google too, right? Whoops, it's Foof, not Google. So you can see again that both Facebook and Google are trading at all-time highs as of Friday, right? So possibly some downside on these names. Otherwise, looking at SPY before we wrap up and Qs. So SPY hits the all-time high on Friday, right? Actually, no, it was just 8 cents off the all-time high. But again, we're still pretty overextended and we haven't had that pullback down to fill the gap at 400 yet. So expect that to happen in the next couple of months. Obviously, timing is tricky, but just trade cautiously over the next couple of months, right? And then we have Nasdaq as well to look at, triple Qs. And we had a nice push up on Friday after a pullback on market open. So possible we hit the 340 area, but again, if those names like Amazon, Google, Facebook, and Apple pull back on this news, you're likely to see a retest of the 320 area on triple Qs, right? Otherwise, not much else going on in the market this week. Earnings are slowing down. There's RH, Restoration Hardware, that they report this week. They've had a nice run the past year. They've gone from about 240 a share to 613 now. So possible we see another spike up. They had a massive run on the previous report, which was a very solid report. So keep that in mind. But again, liquidity in the option chain here is pretty crap. So I wouldn't trade it myself. Just an idea for you guys to look at. I'm going to wrap up over here. If you have any questions or comments, drop them below. And I'll see you guys next week. And we'll do some Q&A right now, okay?